Hi, I'm Andrea from Tucson Tax Nerd. Smart taxes, better futures. This video is a brief overview of how to prepare a tax return, a very simple tax return for someone with a filing status of single who gets paid on a W-2 form and has no dependents. Now, in this recording, we're going to use the actual tax forms that you might pick up at a library or you might print out from your tax preparation program. This is not an exercise in how to use a tax preparation program. It's an exercise in how to understand how your taxes get prepared. Things like the difference between income tax, Social Security tax, Medicare tax, how to understand things like the standard deduction, adjusted gross income, how your tax is calculated, and whether or not you're going to get a refund or not. So let's go. Again, this is a simple 1040 overview using the actual tax forms that you would print out when you're done with entering your income taxes through a tax program, or if you actually fill them out by hand. I would strongly encourage at some point that you actually look at your actual tax forms from your tax preparation program, read through them line by line so that you understand where the numbers come from and how your tax gets calculated, because you may discover a few things that you didn't necessarily know, which are pretty interesting to find out. So our example is a taxpayer named Jordan. Jordan has W-2 income from one employer only. His filing status is single. He has no dependents, meaning that there isn't anyone that he supports with his income other than himself. He has no additional credits or deductions, in part because he makes enough money to not qualify for things like the earned income credit, and he doesn't have any dependents. So he doesn't qualify for anything like the child tax credit, for example. So W-2 income from one employer only, filing status of single with no dependents because he's not married and he doesn't have any kids and he doesn't support any relatives and he has no additional credits or deductions. Before we start going through the actual forms of Jordan's tax return and Jordan's W-2 form, let's talk really briefly about three different kinds of taxes, because this particular presentation is geared only towards income tax. So even though you see income tax and Social Security tax and Medicare tax on Jordan's W-2 form, the only thing we're concerned of for the purposes of this presentation is income tax. So income tax is collected by the IRS to fund the U.S. government. There are more than 400 different agencies in the U.S. government that are funded by taxpayer dollars from people like you, including the Department of Defense, the Department of Veterans Affairs, the Department of Transportation, the Department of Education, the United States Postal Service, and others. Whether or not you agree with what those agencies do is irrelevant, right? Those are agencies that are funded by the dollars that you pay in income tax as withheld from your W-2 form by your employer. And again, also, U.S. income tax is progressive. The more you earn, the more you pay, but also the less you earn, the less you pay. So the income tax system does take into consideration if you're a low income taxpayer, you're going to pay a smaller percentage of your wages in income tax than someone that's earning more every year. The amount withheld per paycheck is determined by the entries on your W-4 form, which you filled out when you started with your employer. I'm going to show you a picture of that a little bit later, because that's often a sticking point for many people who don't realize that they told their employer upfront exactly how much they wanted to have withheld. And then they might be surprised because they actually owe because they didn't have anything withheld. Because if you don't have anything withheld, you can't get any money back. Secondly, Social Security tax is a separate bucket as far as the government's concerned. You may have heard that the government has robbed Social Security to pay for things like defense contracts. We're not going to discuss that in this video. we're just going to say Social Security tax is collected to fund Social Security programs. Right? The total Social Security tax is 12.4%. If you are a W-2 employee, you only pay half of that. You pay 6.2%, and your employer covers the other 6.2%, which is a great deal since your employer covers half of your cost, even though you're going to be the only one who gets Social Security when you get old enough to draw it. Medicare tax, similar to Social Security tax, is collected to fund Medicare programs. Total Medicare tax is 2.9%. Again, if you are a W-2 employee, your employer covers half of that amount, which again is a great deal since your employer is covering half your cost, even though you're going to be the one who gets to actually spend it on medical care when you need that. So again, Social Security tax and Medicare tax are not covered as part of this video, but it is important to bear in mind that if you are an employee that gets paid on a W-2, your employer is covering half of those costs for you, which is a big benefit to you that you're getting from your employer as part of being an employee. This is Jordan's W-2 form. Now, all employees of W-2 corporations should receive a W-2 form by January 31st of the year following the tax year. If you don't receive your W-2 form, you need to go back to your employer and get a copy of the W-2 form. You can get your W-2 form in many ways. You can get it mailed to you by regular snail mail, but you can also get your W-2 form possibly as an attachment to an email. You may also be able to get your W-2 form by logging into your employer's payroll system if you are still employed by that employer. Now, as a tax preparer, I have had multiple cases where an employee went from one company to another, and when they went to get their W-2 forms, they did not have access to the payroll system from which they would have been able to download a W-2 form. But again, you have to go back and resolve that with the employer that was supposed to give you the W-2 form. It is possible to get it from the IRS, but it's a lot easier for you to go back to your employer who should have given you a copy of that W-2 form and get the form from them. And again, often you don't get the W-2 form in the mail. Often you get the W-2 form as either sent to you as an attachment electronically, or you need to log into your employer or former employer's payroll system and download the W-2 form from there. You can get it from the IRS, but it's far more cumbersome because you actually have to file a formal request. Now, notice the W-2 form has some important information, the employee's Social Security number, right? And if for any reason the number that you enter on the form does not match the number associated with your name by the IRS, then the IRS will kick back your 1040 return. Your form also shows your employer's identification number, or EIN for Employee Identification Number. Again, if this does not match the IRS's record, then the IRS will kick back your 1040 tax return until you fix that error. Your W-2 form will list your employer's name, address, and zip code. And again, this is a form that's sent to you by the employer, so that should be accurate. The control number field is often blank on people's W-2 forms because usually whatever information that is entered there is specifically for the employer's use and not necessarily important to the IRS. The employee's first name and initial, that should be correct on your W-2 form. If it is not, you should go back to your employer and get it corrected so that it is your current name and physical street address. Lastly, in terms of the W-2 form, the only boxes that we're really going to talk about in this video are box number 1 for wages, tips, and other compensation, and box number 2 for federal income tax withheld. Now, as I mentioned before, and I will mention several times in this video, if you look at your W-2 form and box 2 is blank, that's a big red flag. You need to go back to your employer, get a copy of the W-4 form that you filed with the employer, which specifies how much you should have withheld per paycheck based on things like how often you're paid, etc., right? And verify that it shows the correct amount. Again, if box 2 is blank and you are not having anything withheld, you're definitely not getting anything back, and probably you're going to owe something, because you're going to owe tax regardless. Whether or not you had it withheld from paychecks or not, you're still going to owe it. So if box 2 is blank, go back to your employer, get a copy of your W-4 form, and make certain that the amount that you asked to have withheld for each paycheck is entered correctly on this form. Social Security wages and Medicare wages, we're not going to discuss those in this video. Those may be covered in a separate video. Total Social Security wages are probably the same as your wages, tips, and other compensation. Total Social Security tax withheld is probably 6.2%, because the other half of the total 12.4% is being withheld by your employer, or is being paid by your employer. Same with Medicare wages and tips. The wages, tips, and other compensation and Medicare wages are probably the same. And Medicare tax withheld is going to be a total of 2.9%, but your employer is going to pay half of that. So the amount that you see is not 2.9%, it's half of that. So when we start filling out the Form 1040, and remember I'm showing screenshots of actual printable tax forms, right, that you would fill out manually. The first section is the personal information section. Make certain that you have the correct form for the correct tax year. This is for last year, 2025. The boxes at the top are not really relevant unless the taxpayer was in the military and stationed in a combat zone, or the form is being filled out for a deceased taxpayer who died sometimes during the tax year. Otherwise, those boxes at the top are not relevant, and certainly not relevant for our taxpayer, Jordan. Last name and middle, or first name and middle initial, Jordan. Last name, Parker. Hey, those should be entered correctly, as should be your Social Security number. Interesting fact about your Social Security number, the first 3 digits are an indicator of what state you were born in. So the first 3 digits of my Social Security number are 169, which is an indication that I was born in Pennsylvania. Jordan is single. He does not need to fill in the first name and last name of a spouse, because there is no spouse. His home address should be correct. If there's an apartment number that should be entered. Same thing with city, town, or post office, and the state and the zip code. If you've moved, hey, this information should be your current address. Also notice you can enter a checkbox in the presidential election campaign if you wish to donate money from your tax refund to the presidential election campaign for the current president. At the bottom of this form is filing status. Just a little note here, if you are married, you cannot file with a filing status of single. If you are married, you cannot file with a filing status of single. You must file either married filing jointly or married filing separately. And there are advantages to that, because married filing jointly at least has a much higher standard deduction than what a single person gets. So Jordan's filing status is single. He does not have any dependents, so he can't file head of household. He's not married, so he can't file married. And he didn't have a spouse who died during the year, so he can't file qualified surviving spouse. The second section of the 1040 form is related to digital assets and dependents. Now for Jordan, both of these are going to be blank. Digital assets is if you as a taxpayer work at all with Bitcoin, then you would check the yes box here. Jordan doesn't work with Bitcoin. Jordan doesn't have any Bitcoin, so he checks no. Had Jordan had Bitcoin, there would be another form, a 1099-DA for digital asset that he would have received from whatever cryptocurrency he held dollars in. The dependents section, again, Jordan is filing single with no dependents, so this is all blank. If Jordan had dependents, right, then you would need the first and last name of every dependent, their social security number, as well as whether or not they lived with you and whether or not they were a student or not. But those topics will be covered in a separate video. Now, the next section is Jordan's income. And notice I've shown a picture of the W-2 form in the top half of the screen. In the bottom half of the screen, I have shown a picture of the income section from the 1040 form. The value from box number 1, wages, tips, and other compensation, $42,500. That is entered directly on the 1040 form in box 1A. Now, something to be very aware of, and we'll talk about this in subsequent slides, is that Jordan is never going to be taxed on that full amount because we're going to apply the standard deduction, which will reduce his taxable income considerably. Everything else between box 1A and 1Z is not relevant for Jordan. If it was, he would have received additional forms with that information. So Jordan's W-2 wages, tips, and other compensation is $42,500 in line 1A. Add lines 1A through 1H, and total income is $42,500. But again, Jordan is never going to pay tax on $42,500. That's going to be immediately reduced by the standard deduction, which we'll see more about in a subsequent slide. To calculate Jordan's adjusted gross income, we need to consider whether or not he had any other sources of income. So you notice like line 2A, did Jordan have any interest from a bank account or a certificate of deposit? Did he have any stock in which he has qualified dividends? Right? So in a company like Pepsi or Chevron or something, and he did not. Did he receive any IRA, independent retirement account distributions? No, he did not. Normally, you wouldn't do that until you're older. Hey, did Jordan get a pension? No, he did not. Did Jordan get Social Security benefits? No, he did not. Line 7A, did Jordan own stock through a brokerage like Charles Schwab or Ameriprise, in which he may have sold securities, which resulted in him gaining value or losing value as a result of that sale? None of those are true in Jordan's case, so his total income is still $42,500. And line 11A, his adjusted gross income, which is often referred to as AGI, adjusted gross income, is the same as the amount that we entered from box 1 on Jordan's W-2 form. But again, Jordan's never going to pay tax on that amount. He's going to pay tax on that amount minus his standard deduction, which is based on his income and his filing status. And so again, his adjusted gross income, the top half of the screen shows the bottom of page 1 of the 1040 form with the $42,500 from box 1 on Jordan's W-2. The bottom half of the form shows page 2. The first line was carried over from the bottom of page 1 to the top of page 2, still $42,500. But again, hey, Jordan's AGI or adjusted gross income is not what Jordan is going to pay taxes on. He's going to pay taxes on that amount minus the standard deduction. So what is the standard deduction? The standard deduction reduces your taxable income immediately. It's a decision made by the U.S. government based on things like your income, your filing status, It changes every year. It goes up a little bit every year. One of the benefits of the standard deduction is that it takes less time to file because almost everyone claims the standard deduction. If you are an older person and you remember using itemized deductions, those are for the most part no longer relevant. Itemized deductions were things like medical expenses, charitable deductions, etc., but they always or almost always had to add up to more than the standard deduction to even be considered. And the standard deduction for a single person is $15,750. It's very, very difficult to get itemized deductions that are above that amount. Even if you had very high medical expenses, the majority of those would have been covered by insurance. So it's never going to come up to $15,750. Even if you went to Goodwill every week and you donated items and you got receipts for the value of the items that you donated, chances are it's not going to come up to $15,750. Now, it is possible based on your state that there is some benefit in itemizing deductions, but certainly not on your federal. Hey, you can ask your tax preparer or you can, look through the IRS website, but in general, it's always best to use the standard deduction. You're simply not going to be able to have enough in itemized deductions to get higher than the number for your standard deduction. Also note again that the tax system is very much geared towards the advantage of married taxpayers. So notice that the married filing jointly or qualifying surviving spouse standard deduction, which is subtracted right off your income to determine your taxable income, is nearly twice as much for someone who is married as it is for someone who is single, despite the fact that someone who's married may have the benefit of sharing expenses of having a roof over their head. Head of household is also slightly higher than single. That is based on the fact that normally someone that can claim head of household is paying expenses for dependents who can't pay their own expenses, such as children or family members that are ill. But again, the primary point for the standard deduction, it's going to be subtracted from your adjusted gross income. And normally there is no point in using itemized deductions because you can never get itemized deductions that add up to more than your standard deduction. Now, in this screen, which shows the standard deduction and how it gets subtracted from your total wages and adjusted gross income. So line 11B shows the $42,500 that was recorded in box 1 of Jordan's W-2 form. And then line 12E, we take the standard deduction of $15,750 for a single taxpayer, and we subtract that right off of Jordan's income. So right out of the box, Jordan earned $42,500. He's only going to pay tax on a little bit more than half of that, or $15,750, right, which is the standard deduction for a single person. So line 15, Jordan's taxable income is $42,500 minus $15,750. Jordan's only going to pay tax on $26,750, which is kind of like a gift from the U.S. government. So again, we take the $42,500, we subtract the standard deduction. Jordan's taxable income is already immediately down to $26,750. Next, we're going to calculate how much tax does Jordan owe on $26,750. But just to reiterate, he is not paying tax on everything that he earned. He is only paying tax on what he actually earned from his W-2 form minus the standard deduction. So Jordan's taxable income is $26,750. Oh, just to reiterate, Jordan's taxable income is his adjusted gross income, $42,500, minus the standard deduction for someone with a filing status of single, which is $15,750. His taxable income is $26,750. So the standard deduction is effectively a gift from the U.S. government directly to Jordan, the taxpayer. Even though Jordan earned $42,500, he's only going to pay tax on $26,750 of that $42,500, which is a little bit more than half, but still a lot less than paying tax on the full amount. Now, the table at the bottom of the screen is directly from the IRS website. Remember that we mentioned earlier that the IRS income tax is progressive, meaning that the more you earn, the more you pay, or a higher percentage that you pay. But the less you earn, the less the percentage you are taxed. Whether or not you agree with that or not is not a question here. The point is that it is a progressive system. Right? Because Jordan's taxable income is $26,750, he falls in the 12% tax bracket for people with taxable income between $11,926 and $48,475, which admittedly is a big bracket. Notice that the highest bracket is 37%. Now, a good portion of U.S. personnel fall within the 22% tax bracket, which is they earn between $48,476 and $103,350. And they are paying nearly a quarter of their income to the U.S. government versus Jordan, who's only paying 12% of his income in income tax. So a significant difference. Whether or not you agree with it or not, that's what the tax brackets are, and that's how they're laid out. If Jordan was earning $255,000 a year, he'd be paying nearly a third of his income in taxes. Next thing is we're going to look at how much Jordan owes in tax, right? So Jordan owes the amount in tax associated with the tax bracket within which his income falls. So Jordan's tax owed, okay, not paid, what he owes is $3,452, right? Which was $26,750 multiplied by 12%. Now, we're going to cover this in a subsequent slide, but if you remember, this is not how much he had withheld. He didn't have enough withheld, right? So he's actually going to end up owing because he owes $3,452, regardless of whether or not he has it withheld from his checks during the year or whether or not he pays it all at tax time in April of the subsequent year. He's still going to owe the same amount of tax, which is $3,452, and it's more than he had withheld, so he's not going to get a refund. He is actually going to end up paying. Now, another little comment here is there are several things in this area of the 1040 form. Just one of them I'm going to highlight, something called the child tax credit. Again, tax law is basically kind of slanted towards people with children. The child tax credit is a refundable credit which could reduce a parent's tax liability to zero. Jordan doesn't have children, and so there's nothing on line 19, right? But it would be a credit which could reduce the amount that he owes to zero. Okay? It's what's called a non-refundable credit, which means he won't get a refund if he gets the child tax credit, but it could reduce his tax liability to zero. Okay? But again, he's filing single, he doesn't have dependents, so it's not going to be relevant in Jordan's case. Now, in this slide, again, in the top part, we're showing Jordan's W-2 form, and again, it shows in box 2, the federal income tax withheld based on what Jordan asked to have withheld by filling out the W-4 form with his employer. It was $3,100. Well, he owes $3,452, and he's only had $3,100 withheld during the year, so he's going to owe. And again, if you look at your W-2 form and box 2 is blank, you're going to owe whatever the appropriate percentage of your income is if you did not have tax withheld throughout the year. Right, so Jordan did have $3,100 withheld. He owes $3,452, so he's still going to owe a little bit because he didn't have enough withheld. Okay, but he had some withheld, which is a lot better than having nothing withheld because you didn't make the appropriate entries on your W-4 form. So speaking of your W-4 form, I thought that I would have a separate slide in here that shows you a picture of the W-4 form. Now, all I showed in this slide is the entrance of your name and address, okay, because the amount that you have withheld varies from person to person, and the way that you figure that out is there is a tax withholding estimator available on the IRS website that you can go through, okay, that will allow you to determine, based on a little quiz, how much you should have been having withheld from every paycheck. And it's different based on your filing status. It's different based on whether or not you're paid weekly or biweekly, because it's the amount to be withheld from each individual paycheck, which is different if you get more checks in a year. So the amount of income tax withheld on a taxpayer's W-2 form is determined by the amount specified on the Form W-4 that the employee filled out when they started employment. And note, many employees are unaware of or don't remember filling out this form. And I would say, as a tax preparer, that was a good 25% of people that came through my office. So you, as an employee, should check regularly to see what information your employer has on file on this form. Go to the HR department, get a printed copy of the form, look and see how much you're having withheld. Box 2 on your W-2 form should probably not be blank, because that means you're having nothing withheld. If you are having too little withheld, you will owe at filing time. If you're having too much withheld, you will get a refund. Either way, you're going to pay the same amount of income tax for the year, regardless of whether or not it gets taken out of your paychecks or you pay it in a lump sum at tax time. Okay, but you always want to check your W-4 form at the beginning of a tax year. So for 2026, you should have already gone to your employer and gotten a copy of the W-4 form, because if you fill it out now, it's only going to take effect for the last 6 months of the year rather than the entire year. You can calculate the recommended withholding amount each year before checking or updating the W-4 form with your employer by using the tax withholding estimator, which is a link on irs.gov. It asks you specific questions to determine the appropriate amount you should be having withheld from each paycheck, depending upon your filing status, how often you are paid, and whether or not you wish to get a refund at tax time or not. Remember that if you have a sufficient amount withheld, you will not owe anything at tax time because you had those amounts withheld from your paycheck throughout the tax year. Planning to get a big refund at tax time can be counterproductive. It means you get maybe money back in April of the year following the tax year, right? But it means that you're going to pay, right, as opposed to actually having the money withheld throughout the course of the year from each individual paycheck and not knowing and owing anything in April. All depends on how you plan. You're going to pay the same amount of tax every year regardless. At the next to last little section of the form is the section which calculates exactly how much was paid, how much was owed, and what the difference is. And I think I made a typo here, but Jordan may want to take a look at his W-4 form since he has ended up owing income tax due to not having a sufficient amount withheld. So Jordan's tax owed is $3,452. His tax withheld is $3,100. Jordan owes $352. He's going to have to pay that one way or another, probably by giving, if he's going to a tax preparer, he'll give them his account number and his routing number, and the IRS will take it directly out of his bank account. Or he can wait until April 15th and he can write a check to the IRS as long as it's postmarked by April 15th. But he's going to owe one way or the other. So the top part shows his total payments, which was shown as in box 2 as federal income tax withheld, was $3,100. Okay, but he owes $3,452, right? So the amount that he owes is shown on line 37. It's $352. He can either pay that electronically by having the amount taken directly out of his bank account, which he would need to then provide a routing number and account number for, or he can actually write a check, or he can make a payment with a credit card directly on the IRS website. Something to keep in mind is if you make a payment with a credit card, you're going to pay interest if you use a credit card to pay your tax bill, which is kind of silly. So you should definitely make a payment, probably electronically on the IRS website. There's no reason for you to pay credit card interest, when you're already owing income taxes. So some takeaways from this video. First of all, income tax, Social Security tax, and Medicare tax are completely separate things. If you're a W-2 employee, you only pay half of the total 12.4% Social Security tax and half of the 2.9% Medicare tax. Your employer pays the other half, which is a huge benefit to you as an employee, right? So your employer's not going to get Social Security income from Social Security, you are. And your employer is paying half of that. So that's a big benefit to you as an employee. People who are self-employed are going to be responsible for that other half themselves. Second point, you never pay income tax on the full amount that you earned. Your taxable income is immediately lowered right out of the box by applying the standard deduction. Single filers have the smallest standard deduction. Married filing jointly filers have the highest standard deduction because, again, the tax code is optimized to benefit people who are married, and even more so to benefit people who are married and have children or dependents of other kinds. Next, the U.S. income tax, just a reminder, it's progressive. The less you earn, the less you pay. Also, the more you earn, the more you pay in terms of percentages. Whether or not you agree with that or not, the U.S. government provides some benefits for you. It pays for the armed services. It pays for the Department of Transportation. It pays the roads. It pays for a lot of benefits that you get from the U.S. government that you may not even think of. And if you want to go out and look, you can just go to Google and Google the list of government agencies that are supported by your tax dollars. So again, U.S. income tax is progressive. The more you earn, the more you pay. The less you earn, the less you pay. And there is consideration that if you're a low income taxpayer, you are paying a far smaller percentage of your income in income tax than someone that earns more than you. So the difference between the 12% tax bracket that Jordan is in and the 22% tax bracket that a lot of U.S. citizens are in, right, is quite large. Also, something to bear in mind is that there are many immigrants in the United States that are paying income taxes, Social Security taxes, Medicare taxes. They may never benefit from those amounts because if you're not a citizen, you can't draw Social Security. You can't draw Social Security. You can't draw Medicare. Right? So just something to bear in mind, right? That people who are not actually citizens of the United States are actually paying income taxes and are paying Social Security tax and are paying Medicare tax. Whether or not you agree with that or not, it is still true. Lastly, employees being paid on a W-2 form should regularly check the W-4 withholding form on file with their employer to assure that they have a sufficient amount of income tax withheld from every paycheck by their employer. Again, I mentioned this was probably the case with 25% of my clients, is that they had never even heard of a W-4 form and they were not having the correct amount held. Sometimes they weren't having anything withheld at all. But if you don't have anything withheld, there's nothing to get back. So you're not going to get a refund. You want to make certain that you go in at the beginning of the year, every year, beginning of the calendar year, and get a copy of the W-4 form that your employer has that you initially filled out when you started employment. You can use the tax withholding estimator to make certain that the appropriate amount is being withheld so that it accomplishes whatever you want to accomplish. Either the money's taken out during the year and you don't owe anything at tax time, or it's not taken out during the year and you do owe at tax time. Thanks again for listening to this video. There will be other topics coming up, including topics like doing a tax return where the taxpayer qualifies for the earned income credit, the taxpayer qualifies for the additional child tax credit, and they earn $25,000 a year and they pay nothing at all. So those will be topics of future videos, but thanks for listening to this very simple video based on a taxpayer with a filing status of single and no dependents. And hopefully you understand things like the standard deduction, the concept of progressive taxes, the concept that Social Security and Medicare tax for a W-2 employee are actually partially covered by your employer. Have a great day.